Good morning. This is a quick little update as to what is happening in the market and give you a little clarity as to what to actually expect. I'm just going to run this live off my screen. On the 3rd of November, we had a sign of a reversal coming at us, and the same on the 4th. I won't get too technical, but the signals were all there. Since then, we've trended down. At the present, we're trying to hammer out the bottom of the market. Our support line lies right here at 98. I'll show you that real quick. So if we blow through 98, we're heading south. Most likely we are at that point, at this point in time, hammering out the bottom of the market before we start to correct back up. I'm going to expand to a quick 3-month view so that you can actually see this, so a little more clarity. Anytime we're up and above 101 at this point in time, we've only been here very few times. And we've come up, we've come back down, and drifted back up again. So the market is volatile. We should see about a 50% correction as time goes on. So getting a little bit more clear. Let's go to the 4.5% coupon so I can show you a little bit more long-term view as to where the market has been. We were up here on the 4th, and we're currently right down here, so we should see a 50% correction sitting right around on the 4.5 at about 104.5-ish. When we've dropped down in the past, like last year when the market was trying to put pressure on the Fed to purchase more mortgage-backed securities, we went from a high of 102 and then came down to 99 and then drifted down to 96 and then corrected back up, and then dropped down, came back up again. And the same applies here. Drop down, we corrected back and up and above, drop down, come back up to about a 50% correction. So we're still at all-time highs if you go back to going back to last year or even 08. I'm going to show you how volatile the market has been. This is actually today. The little yellow alerts here are showing the market's getting ready to reprice for the worst. This is today so far. 1, 2, 3, 4, 5, and 6 reprices. Let's go back to, if I can get there, let's go back to yesterday. Again, as you can see, 1, 2, 3, 4, anything above the red line shows that rates are improving, except when it's coming down here. So the higher that we are in the market equals the lower that rates are, and then we drifted down. So this is how volatile the market is. If we go back to the previous day, you'll see again extreme volatility in the market. So do not try and time the markets. We should correct back up. It's just going to take a little bit of time. We may need another weekish or somewhere in that vein. And then for a little bit more clarity, go back and underneath this I pasted in my 2011 market outlook, so you can kind of scan that. It's a little bit long, so you may want to watch it another time, but it will lead a little bit more clarity. We have issues with Europe's debt still coming at us. China's growth is too fast. We're seeing inflation with some of the nations abroad. So hang in there and have a fantastic day. Hopefully this adds a little bit of clarity. Don't try to time the markets. We should bounce back up. If you're short term, be very careful. If you're just in contract now, then hang in there, and hopefully we'll bounce back up in here and see about a 50% correction maybe next week, but it's just going to be depending on market emotion at this point in time. On that note, have a fantastic day, and I'll be back on Friday morning.